Hi traders, and welcome to Pepperstone's technical analysis wrap on Friday the 24th of April. So we've seen a little bit of consolidation over the last few days in most of the major markets now. We've had some big moves prior to that, and you can see that a couple of the major currency pairs in particular have started to consolidate in this zone. So we'll jump straight in and check out any opportunities that we might see before the London and New York opens and potentially setups for next week. So we'll start with the Aussie on a daily chart. We can see here the last couple of days, we haven't seen a lot of movement. The 20 moving average is holding it up as it has in the past, obviously. It had a pretty nice bounce off there, but look, the ranges have not been very, very large. So if you weren't going down to the smaller time frames and sort of scalping these opportunities, you probably wouldn't have really seen much of a move. But of course, if you take it down to the smaller time frames, like we know we found support here at the 20. So, you know, look, that's at what, the 62, sort of 65 area. We can take that down to a 4-hour or even a 1-hour chart, and you can see some trading opportunities definitely, you know, that have been in place. Like you can see here that we're getting higher highs and higher lows, no question about that. We're hitting the roll reversal zones, and we're hitting the support and resistance zones, you know, on a regular basis. So there's certainly some trading opportunities there. It's just a case of having to break it down to a time frame that it actually makes sense for. But although the daily, you know, obviously looks like it hasn't done a hell of a lot, it's sort of, you know, you moved the best part of about 100 pips. You've certainly had to go down and drill into the smaller time frames to take advantage of those opportunities. So again, you know, I said it last week, you know, I encourage people to get down and sort of scalp these environments when the market is a little bit volatile. But of course, even when it does consolidate a little bit like it is doing at the moment, you can still get into trades and, you know, extricate some, you know, reasonable moves from the market, you know, without taking, you know, any crazy risks. So we'll move on to the US dollar CAD now. Again, here on a daily chart, you can see, you know, look, this has been influenced a little bit by obviously the big drop in oil that we've seen this week. That's played havoc with a little bit of the movement on the CAD as we would expect. But the last couple of days, we saw this big drop off here, this big daily candle. I'll make that a little bit bigger. You can see that there, you know, hit the 20, and it has actually reversed off it, and it's finding support again here at around that sort of 140.80 zone. So look, it's a little bit of an unknown really with this one. Like, it doesn't really, you know, give us any indication that it's going to do anything, you know, extravagant in either direction. I think it's just a case of waiting and seeing. If you are going to trade this particular pair, you're only going to go for the small moves, because I certainly I've got no idea where it's going longer term. And, you know, so I guess you have to aim for those, you know, shorter term targets and just play the game until it eventually breaks out one way or the other. But, you know, a logical target for a short here would be, you know, down to sort of this 138.70 area, you know, this level here, which is also going to coincide with the 50 moving average. Wouldn't be a surprise to see it do that, but, you know, the 20 is holding it up at the moment, so you have to see a significant break past this 20 on the daily chart before I'd be starting to short this one. And a long opportunity, of course, would be making a new high. You want to see a daily close above the 142.60 area, and that would indicate that we're starting to get a series of higher highs and higher lows again, and that exposes the next zone of about 145 to 146, which is the previous high that we saw sort of mid-March. So that's definitely an opportunity. You could definitely see that happening. It's probably my preferred trade prior to the short. Like, I'm not excited by the short here, but I would like to see a bounce off this 20, make a new high at this point here, and then aim for that sort of 145, 146. That would be a nice play for the US dollar CAD. So let's go on to the US dollar Swissy, which has been scalper's heaven, has been for a long time, always is. You can see that the ranges are really nice. You know, still technically, you know, playing the zone. It's playing the game with the support and resistance. You can see that the 200 is more than likely going to hold it up, which it often does. For those of you who have got into this trade, we talked about it on Wednesday. You know, you're well and truly, we're just about taking profit, really. Like you can see, it's getting very close to the 20 now. It's at that zone where we would expect it's going to find some trouble. But again, the moves have been very, very small on this one. So if you're not going to the smaller time frames and yeah, trying to pinpoint the actual areas, yeah, you're not going to really, you know, you're not going to get a lot of joy. But yeah, for those who are scalping it on the 1 hour in particular, you are getting a lot of entry points, and it's pretty, you know, they're pretty straightforward moves. Not huge, but certainly consistent. So one to watch for this one. Again, trying to pick a direction on it is all but impossible. You can see it's been very, very flat for a very long time now. Very long time, as you can see by this chart here. since this is going back all the way to the August in 2019, it has done absolutely, nothing for, for any significance compared to other major currency pairs. But again, it's provided plenty of opportunities in between the support and resistance. So just, again, keep playing the support and resistance game with this one until it eventually breaks one way or the other, but I wouldn't be expecting that anytime soon. Okay, the US dollar yen is the next one we will look at. Okay, we were talking about the support that it found here, mini double bottom, not even a double bottom anymore, really, you wouldn't say, because it's basically done nothing for a week. It's had a very, very tight trading range. You can see that the candles have got big wicks on them, so very, very indecisive candles. We're not getting any closes or opens of any significance. Basically, they're opening and closing roughly at the same area, but ranging in between. The only way you're going to get any trades whatsoever on this particular one is going back to something like the 15-minute chart. But even then, it's a messy-looking chart. And look, when charts are looking this messy, realistically, there are just better trades to be had. So until this breaks into a direction one way or the other, this is just one of those ones where you're just not really getting good bang for your buck from a risk-reward perspective. Like you can see, when a 15-minute chart looks like this on one of the majors, it paints a very clear picture of what's happened over the last 7 or 8 trading days, which is not very much at all. The 20 and the 50 moving averages are sitting right above price. They're going to halt it. You can see it's got resistance right in front of it. So even if it did break these 2 moving averages, it's going to have to get past this resistance zone, which was support for quite a long time at around that sort of 108.50. Not a lot of fun in this trade, not a lot of excitement at all. The only thing that would get me involved and excited about trading this particular one is maybe seeing a break below this level here, below the 1.7. I'd like to see the 1.7 well and truly broken, and then that exposes sort of that 1.5 area, which is a pretty reasonable area of support and a logical target if it does go short from this point onwards. Okay, the S&P 500. Let's pop into that one. So we're getting some, look, we've been identifying, a little bit of weakness on this one over the last, week or so. It hasn't really strengthened this week. It's been a pretty quiet week on the positive front from it, but I'll blow it up a little bit. Here we can see here that, we've had the higher low. We had the weakness earlier in the week. We've got, what's effectively a shooting star candle right there. If we see, what would really make me happy on this particular pair now is, I should say, is to see tonight's candle or today's candle close and make an equal candle to this one. That would give us a very clear evening star pattern. Those 3 candles there will give us an evening star pattern, and that will expose the next level, which is probably sort of that 2600. But I don't even know if that will hold. I would think that if this pattern plays out, and that's going to require a close in tonight's trade or tomorrow morning for us in Australia, of probably something below the 27.25, that would paint basically a beautiful evening star pattern. At the very, very least, I would be expecting that to push down to the 2615. That would be the expectation there, but I would be thinking the 2500 and even potentially beyond that could be exposed, because that it's already showing weakness, and that pattern will just play that and confirm what we kind of already expect and what the world is actually waiting. Most of the world is waiting for this to weaken. It just seems to defy gravity at the moment, given what is going on from an economic standpoint. But let's just wait and see what price does. We're certainly not going to trade against the trend until the trend is well and truly broken. And that said, if we do get a low below this level here, this trend will be broken, because then we'll have our high, our low, our lower high, and of course we'll have a lower low, which will hopefully push us down into that negative territory again. Okay, let's jump into gold. Gold has been our friend for several weeks now. You can see that it's been trading in a really, really nice, this is a weekly, I'll put it down to a daily to give us a better picture of what's actually happening. We saw that touch of the 20 that we discussed earlier in the week. You can see that it bounced off that beautifully, created that nice long candle, and it continued on with it since the webinar. As you can see, it's pushed up as high as sort of that nearly 1740, which is a really, really good zone. in order for it to take out the 1750 level, it's going to have to obviously make a new high. But if it does close, and we need to see it close, I can't emphasize enough that it has to actually close above that 1750 for this to be, a really opportunistic chance to go to the $1,800, which is, what a lot of very good judges are predicting. MACD is still certainly on its side. They can see the signal line is still rising. Stochastics is definitely pushing up higher on this one. So, I do like it, but it still has to do the job. I mean, obviously a lot of people are already long and have had some really, really good opportunities in this one, but the pressure test is here. It needs to break above the 1750. If it does that and closes above that on a daily candle, that would certainly expose the upside to potentially up to the $1,800 zone, which is what a lot of people are expecting and looking pretty good if it manages to do it. So a good one for us that has been. All right, we'll jump into the euro. This will be the final one we look at because the rest of the markets are fairly flat. But the euro is finding itself just a little bit below the support zone that we were talking about. We know that the 107 level here is obviously a really, really important level for it. 107.50 is, roughly, it's a zone. Look, it's not so much an area where you're going to expect it to stop. It's more about a zone. We know this is obviously an important zone for it. You can see here, it's been very strong support. It's been, resistance. This is, what we're looking for here is either a change of trend on a smaller time frame to start heading up again, or probably going with the consensus of what the price is looking like it's doing, which is actually pushing lower and lower. You can see here, this is again, this is a 4-hour chart. You can see it's hitting the 20 on the 4-hour and pushing down every time it touches it. While it's doing that and making lower lows and lower highs, there's no reason to be going long on it. Okay, we know we've got a very logical target here at around that sort of 106.50, which is still about 100 pips away. So if we, get a new break down here, or potentially it comes up and touches the 20 again, and we're still printing lower highs and lower lows, it's an opportunity to sell it again with a clear target here of about that sort of 106.50 in the first instance. I'll take it out to a daily and it makes it a little bit clearer. You can see here, it's made a new lower low from this point here, but this is what we're aiming for. If it does close, we need to see a daily close below this level. So a daily close below the 107.50 would expose the other target that we'll be going for, which is around that 106.50. Not a massive move. Look, it's only 100 pips and on something that's been fluctuating quite a bit. It's not a huge move, but still certainly plenty of scalping pips to get there if you are able to capture it at the right time. So keep an eye on the shorts for this one. Not interested in the long until we get a series of higher highs and higher lows on a 4-hour time frame at the very, very least. So I hope everybody has had an awesome week's trading. It's been pretty good from a technical standpoint. We've had some pretty good setups that have played out quite nicely. The market has behaved itself, even though it has been fairly volatile. So I hope everybody has an awesome weekend, and I look forward to seeing you all next week. And hopefully you'll be able to attend the Wednesday night webinars. Have a great weekend, guys.